Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Greetings everybody, guys. If you remember, on the weekend we have a really big choice of different assets for discussion, so we have given a hint on the also interesting situation on the Japanese yen, and today we will take a look at it. In the Canadian dollar, guys, since we have talked about it in the weekend, take a look that the market has completed the first part of our trading plan, and on the hourly chart our OP pattern has been reached. So take a look at this AB equals CD pattern. This market has hit the target, now stands for retracement. It means that on this retracement we could watch for a possibility to take in the long position because we expect a further upward continuation. If you remember, and when we have discussed the Canadian dollar, there are different patterns with the different targets exist. So it's one of them, the butterfly on the weekly, on the daily chart. So it's really big potential for Canadian dollar to the upside. But currently in this week we probably will be watching for a bounce and trying to use this bounce as potential for taking the long position. Meantime, let's take a look at the Japanese yen, because the situation on the Japanese yen we have discussed 2 weeks ago. And we will start from the weekly chart, because actually here is the major detail of our trading plan. Those of you guys who are interested with the Japanese yen analysis probably remember that we have talked about this confidence resistance. And this confidence resistance, in fact, the key for the further direction in the Japanese yen. That's why a lot of things have been based on the price behavior right around this confluence. And if you remember, we said that depending on what will happen here, it will be quite different action. So if market will break this confluence to the upside, our long-term pattern on the monthly and weekly chart will be erased, and the market probably will continue move higher. But if market will complete our suggestion, will complete our idea that will be resistance and it starts to drop down, this will be further downward action on the Japanese yen. It was a bit dramatic action, because on the 2 weeks ago, when the week has started, market start showing this upward action, and lots of questions was on the forum that what is going on. It seems that market will break this confidence resistance, and it's probably the scenario that we have discussed in the weekly research will not be completed, and yen probably will continue rally up. But that was a bit dramatic, and market has moved slightly higher compared to the levels that we have talked about. But still, if you'll take a look at the weekly chart, it still holds in a reasonable distance around this confidence resistance. So we could say that this confidence resistance is still valid, and market has not broken it up. Even more, if you'll take a look at this picture, you'll see in the weekly chart really significant and strong bearish engulfing pattern. And this bearish engulfing pattern suggests a further downward action here, at least deeper retracement on the weekly chart of the Japanese yen. Maybe this will be the starting point of the completion of our long-term setup. This is also possible. But now we're mostly more interested with the short-term targets. So if you take a look at the daily chart, on the daily, this engulfing pattern takes the shape of the very accurate possible head and shoulders pattern. So this part of the head and shoulders takes the shape of the butterfly, and particularly this butterfly we have discussed in last week when this upward action was continuing. The questions was, guys, should we treat this as the failure of our scenario? I said, well, keep an eye on this butterfly and see if this butterfly will work, then our scenarios will be still valid. If not, if market will break this area to the upside, then probably it will fail. But as you can see, was the normal reaction. This butterfly has been completed, market turns down. Now market is coming to the strong support area, 108.60, 108.80. It's confidence support, and this also gets the potential neckline of our head and shoulders pattern. Market is not oversold here, So those of you guys who have taken short position on this butterfly and gives this drop, now it's time to think about taking the profit. For scalp traders, this could be an opportunity for trying to take the long position with the bounce up, because if we will suggest the harmony of these hand shorts, it means that the upward bounce should be somewhere to 110 even. So red, this is right arm should be formed here of this pattern. Market's coming to the strong support area. On the hourly chart, guys, we have two different patterns that point and stands in agreement with this confidence support. They are ABCD pattern. So OP target stands at 108.48. It's right here, and this pattern could be finalized. We'll take a look by the butterfly. It's 161 and stayed 108.40 approximately. Also, guys, here as you can see, as a point, I have taken the absolute top, but in reality, the downward action has started from that point. So it also could be another ABCD pattern. So you need to keep an eye on the both extensions. If you will use the A point here, in this case, the ABCD target will be somewhere around 108.65, 108.70, and butterfly will be not 161.8, 127. So we need to keep an eye on both targets. But anyway, it's not really a big difference, just 20 pips between this target and more extended target. It means that the area around 108.45, 108.70 will be the area where market could start upward action with the target 110 to complete the right shoulder of the daily pattern. That's what we'll be watching for on the Japanese yen in the nearest future. But more extended analysis is based on this head and shoulders, on the whether it will work or not. If it will work, this really could confirm our long-term analysis that we have prepared 2 weeks ago on the Japanese yen, and market could drop right to the 103 area. It's really possible. But right now, let's keep an eye on this potential reversal. This will be opportunities for daily traders, so they could take the profit around this area and wait for the bounce to the 110, where short positions could be reestablished. For the scalp long traders and intraday traders, this will be opportunity for taking the long position with the 110 target. So just keep an eye on this potential bullish reversal patterns around strong daily support area.